Well, wheat prices took a beating this week, falling 35 cents. So, Kim, what happened?
Well, the WASDE report was released last Monday. It did not meet expectations, especially with corn. The pre-release estimates had corn at 13.2 billion bushel production. It came in at 13.9. Now, wheat's been priced with corn, and as corn prices went down, so did wheat prices. In the WASDE report, they raised U.S. wheat production by 60 million bushels. The majority of that increase was hard red winter wheat, and the rest of it pretty much hard red spring wheat. So that caused more weakness in the wheat market. And then if you look at the hard red winter wheat protein level overall, around 11.2 to 11.3%. Oklahoma's protein was 11.4%. The market needs 12 to 12.5% protein, and so leaves something to be desired there with our wheat, and our wheat right now is being priced in the feed market.
We're always hearing about Russia and how Russia impacts our wheat market. Now, Russian wheat production came in less than expected, so why aren't wheat prices going up?
When you go back a couple months, we was expecting Russian production to be 2.85 billion bushels. It's right now at 2.68 billion bushels. Last year it was 2.64 billion bushels, so it's just slightly higher this year than it was last year, below expectations, but Ukraine increased production offset that decline in Russia. You look at the Black Sea, that's Russia, Ukraine, Kazakhstan, their production come in right now at 4.23 billion bushels compared to 4.07 last year, just so significantly higher production in the Black Sea than last year, even with Russia's expected production lower. You look at the exports, Russian exports are projected to be lower this year, 1.3 billion last year, 1.25 this year, so lower. But if you look at the Black Sea area, 2.2 billion compared to 2.25 billion. So 21 million bushels less exports. And so what we lost in Russia, Ukraine and Kazakhstan's making up for.
And it was also reported that Russia is negotiating with Saudi Arabia, so what kind of impacts is that going to have on our wheat markets?
That's going to have essentially a zero impact. Saudi Arabia buys most of their wheat from Germany. They're our 41st or somewhere in that vicinity importer of U.S. wheat. In other words, they normally import around 2 million bushels a year from the United States. That's insignificant.
Is there any chances that wheat prices will recover at all?
Well, there's always a chance, but you look what happened this week. We took that big hit in 2 days, and then we didn't even get a bounce out of it. It's just been wallowing around at the bottom of that prices. I think what bothers me is the futures, I think, has probably bottomed out. We still got a relatively strong basis. There's a possibility we could lose that basis strength and even lose more cash price. Right now, I expect prices to stay at this level as we digest the world crop coming in. We've had a report this week that European crops coming in above expectations. And so we got to wait till everything washes out. I think we'll probably get slightly higher, but I don't think we'll get significantly higher prices in wheat.
So with all that information, what should our Oklahoma producers concentrate on?
I think they've got to look at next year's, planting next year's crop. Plus, if they've still got wheat in the bin, selling at $3.60 to $3.70 is, that's pretty unpalatable. But however, you can sell that wheat if it costs about 6 cents a month storage and interest costs. For 21 cents, you can buy a December call option at the money. Or you can buy a at-the-money call option for March for 25, 26 cents. That's storage. So if you'll spend your storage money, sell your wheat, lock in that bottom price, sell your wheat, buy a call, I think you need to consider that.
All right, thanks, Kim. Kim Anderson, Grain Marketing Specialist here at Oklahoma State University.